Good afternoon, everybody. I'm delighted that you've chosen to join us, and we've got a nice short webinar about finance for imports and export. And the panelists today, we have James Bowker from Export Finance in the UK. We have Holger Schmidt, who is a Director of Development for URICA in Germany, and my name is Ian Fitzharris. I'm a Director of URICA also, and building out the global platform. Now, what I would like to point out is you have the possibility to connect with us, and you'll see the bottom left-hand corner of the slide shows you where you can connect and tweet at us. You can also send in messages across the site. We've had quite a lot of questions, and so I'm hoping to have quite a lively session. My background, I've been in the banking and trade finance industry for many years, also credit insurance. I set up a business, listed it on the London Stock Exchange, and traded throughout the UK, France, Germany, Netherlands, Spain. I've worked in Asia and also Australia, and I'm hoping today that we can give you some good insight into how to get exports and imports really moving. Now, if I can hand you across to James, please. James, can you give us a quick introduction to yourself and tell us about what you're doing, please?
Yes, good afternoon, everybody. My background is, last 25 years really, is primarily credit insurance focused, both from an underwriting and broking perspective, primarily looking after large international clients, so working with them and their customer base in Europe, USA and Eastern Europe primarily. I've been at UK Export Finance now for 3 years, where the role really is to raise the profile of what UK Export Finance does in my respective patch, but there's 24 of us based around the country, and our offering is credit insurance and also guarantees to banks to free up the lending process, really, hopefully to add some sort of security to that which the banks already have, and hopefully make a lending decision more palatable for them.
Holger, can you introduce yourself and maybe just give a quick background?
Yes, of course, I will. My name is Holger. I'm from Germany. I'm based in Munich, and my experience is more than 20 years in the financial industry. It's 10 years in the investment industry and more than 10 years in the factoring and the SME business.
So the background to today is we've looked at exporting very closely, and our research has revealed that people see exports to barriers to exporting. The first barrier is, how do I get the order? And that's always the big problem. Which markets do I go into, and how do I sell the product? But today, the government gives a tremendous amount of help in that area. But the next problem then becomes, how do I get paid? What's the currency risks? How do I take those risks out? How do I deal with foreign currency exposures, particularly with a pound, which is quite volatile? And what we found is that 70% of small and medium-sized businesses relied on their domestic balance sheet to finance exports, and 65% asked for cash up front, which is a huge handbrake on growth. James, can I pass back to you and ask for your comments on that?
Yes, I mean, a lot of the time in my patch, and I think it's generally the same for my colleagues around the country, we're seeing businesses from startups to much larger businesses. At present, the focus is probably on getting smaller businesses exporting and making them aware of what help is there to deal with some of these issues that you flag up here. And I think one of the biggest issues is taking the first steps for a new exporter going into a country that they don't have experience in. And whilst they often, the starting point is asking for payment up front, they soon realise that that puts them at a competitive disadvantage because others are sort of offering incentives by offering time to pay, and then that leads into some of the discussion which I guess we're going to be having today about some of the ways to deal with that. And credit insurance, of course, is one of the ways where it's used in the UK. Perhaps not as much as it could be, and I think we're going to explore some of the reasons for that. The currency risk is obviously an issue, and there are ways to mitigate that, but often the conundrum that exporters, small businesses face is that the cost of putting in a currency mitigant, a currency fix, a spot off, or other ways to deal with it. Sometimes the cost of putting that in outweighs the perceived benefit, and at the bottom line is some of these mitigants affect the profit margin. But really, I think the idea is to at least make people aware of what's out there, and then they can get to a decision about how best to deal with the conundrum for them, for their particular situation.
In terms of the UK as an exporter, the UK has a long history of exports, but the truth is that at the moment we're in sort of negative territory in the balance of payments. You'll see from the slide that we've just pulled up that the UK is exporting about 151 billion, but Europe is importing about 216. Now, weak sterling, in the short term, it was a bit of a sugar rush, and it got exports moving. But now what we've seen is that the import prices have pushed up the cost, and that's feeding through, and it's actually having a little bit of a negative effect. The truth is we import half of what we export, and so all of that has created some uncertainty. But nevertheless, the UK has a great opportunity, has great products, both manufactured, creative, services, and is in a strong position. And what we're interested in is how do we get that moving? How do we correct that balance of payments problem? Holger, can I ask you to jump in? The UK is number 10 on the list of the world's exporters. Germany is number 3, and the most powerful exporter in the European Union. Do you have some comment on that, please?
Yes, I have. So it's a long history that Germany is a great country for export, and it's a lot of doing trade with countries all over the world. So it's we are well informed about for the export, how we finance it and how we insure it. So we used to use credit insurances and factoring as well, and it's an increasing market in Germany as well.
James, a great deal of experience. What's your view on that, please?
In terms of Germany's position and our respective poor showing, did you mean?
Showing, but where do you think the future lies for UK exports, and what should people be thinking about?
I think the thing is there's lots of creative solutions to deal with this, to encourage people to export safely, to enable people for businesses to grow their business and know that they will have peace of mind. I think URICA is a good example of that. And credit insurance is being sort of, if you like, being brought to a more wider platform through some of the initiatives that are now gradually being sort of introduced. I think traditionally the distribution of credit insurance has been through credit insurance brokers, and unlike Germany, I think traditionally the UK has perhaps got to catch up a little bit, where in terms of the traditional banking system and credit insurance working together. I think, certainly in my patch, and what a lot of my colleagues are seeing around the country, is that order books are actually fairly strong for a lot of smaller businesses, I don't think that is just necessarily a blip because of the weak pound. I think that lots of businesses are realising that they have got to make a bit more of an effort to get out there, and they realise that the UK is quite stagnant in terms of being able to grow their turnover. So the only way they're actually going to grow further is to sort of get out there and sort of win orders from overseas. So the impression I'm getting is that businesses are making more of an effort to explore opportunities overseas. Therefore, government can help by through the Department of International Trade, which has a website which flags up what overseas buyers are looking for in terms of goods and services. So they're making exporters aware of what opportunities are there. So I think government and private sector needs to just make it a lot easier and a lot more accessible for businesses to be able to put in measures to mitigate against any risks that are sort of that arise when businesses undertake their first exporting steps. That's what I think our role should be with the private sector, and I think we should all try and sort of work together to try and assist in making sure that lack of finance or insurance doesn't really get in the way of winning an export order. UK Export Finance is there almost like as a kind of backstop if things aren't working as they should be in the private sector.
James, hi. How does that practically work? How do people get in touch with you? And if they can't get the answer they want from the private sector, what happens next?
Broadly speaking, what UK Export Finance falls into two categories. Credit insurance, where we're going to cover most markets in the world. In fact, there's really only 12 countries in the world where we cannot offer credit insurance. That's, to be fair, that's in addition to markets we're actually not allowed. In addition, there's markets where we're not actually allowed to offer cover, but we're talking there about the safe markets, the EU and OECD countries where the private sector can offer insurance easily. So in terms of credit insurance, if the private sector cannot offer, then exporters should contact us directly. If you just search for UK Export Finance, we're pretty easy to find on the internet, and contact us directly to try and deal with that issue, or they can come through a credit insurance broker. The other category is the products we do through the banks. We have products to assist the flow of working capital. If there's an overseas contract where working capital is an issue, lack of working capital, the bank is on board but perhaps needs something extra to get it over the finishing line, UK Export Finance can step in and work with the bank to provide a guarantee, so the bank has government security, and that we hope helps get it over the finishing line in terms of a lending decision. If any business is involved in bonding, performance bonds, tender bonds, contract bonds, they will know that quite often if a bond is put forward by their bank, the banks will often ask for the equivalent value of the bond in terms of cash security. So any bonding requirement immediately ties up an exporter's cash flow because of the money they need to set aside to provide the cash cover for the bond. And therefore we can look to provide a government guarantee to the bank for a large proportion of the bond value, so the exporter doesn't need to set aside such a high proportion to cover the bonding value. They have more money available, therefore, for rather important working capital. That side of things, the starting point we normally would say is to speak with their bank, their relationship manager, but we are aware that sometimes there are sometimes issues surrounding that. They don't know who to talk to at the bank, or maybe sometimes the bank is unable for whatever reason to assist. If that's the case, if they start to hit a bit of a brick wall, then we encourage them to speak to me in Norfolk, Suffolk and Essex, or my colleagues, 24 of which are based around the country. Again, on our website, if you search for Find an Export Finance Manager, people can find the contact for their local area.
That's great. Thanks, James. I'd like to give you just a little bit of background on URICA now. URICA is a strategic collaboration with Euler Hermes. Euler Hermes are the world's largest trade credit insurer. They underwrite nearly 900 billion euros of trade in 50 countries around the world. We've put together a new technology with them, a digital technology that can deliver credit insurance, finance, and foreign exchange around the world. At the moment, we have currently nearly 2,500 users, but it's growing very quickly at 2,500 a month. Solution for exports that we have is funding invoice by invoice. Essentially, you get secure accelerated payments and the ability to offer more competitive terms. So the problem that we've seen with exporters is, yeah, they win the order and then they say, yeah, but how do I finance that? How do I make sure that I get paid? What happens if it all goes wrong? Do I have to get a solicitor in that country? And then what happens? What about the forex? The thing, in the past, you've been able to buy credit insurance, banking, forex, but they're all separate, and they're not working in harmony and symbiotic. And this is what we've tried to create, using new technologies on a digital platform to deliver a total holistic solution. So you can now go online, you can enter the name of your customer, you will find maybe the 10 nearest matches in the database, you'll select that one, and you'll say, okay, I'm at a trade show in Munich, I have an order potential for £100,000, this is the name of the company, what will it cost me to get paid cash? I'd like to offer 90-day credit terms to my German buyer because he can buy locally and the local supplier is offering those credit terms. Can I compete? And within a third of a second, so without leaving the stand at your trade show, you're able to say yes. This is going to be the price, and you will know that you are covered. And that is the new solution. It is a new solution that Euler Hermes and URICA have brought to the market. We think that's very, very exciting. Holger, I know you've had some experience of this, and you've started to introduce it into the German market. Can you give us an insight into what the German view is on this?
Yes, as Ian said, we are just starting the business in Germany, and we have a lot of inquiries now already, and so we are very keen that we start the business very successful. And you know, the market is changing in Germany. It's we have of course, we have a lot of traditional credit insurances, but the single invoice cover, the market for single invoice cover, single invoice financing is very much increasing in Germany, and so we have a lot of inquiries yet.
Thanks, Holger. The other thing that's really interesting about single invoice cover, and it is quite dramatic, it's to give you a comparison, single invoice cover is a little bit like iTunes versus HMV vinyl. I don't want to buy the whole album. I don't want to go to the shops and wait a lot of time. I just want this track right now. And this is what single invoice cover is. I can buy insurance for one trade, and that trade will last from the end of October, and I'll get paid at the end of December. I just want to cover that risk. And it's this customer, it's that country, it's this currency, and that's what you're able to buy. And our view on life is that's the way the whole insurance market is going to move. Euler Hermes are the first in the world to introduce it, and URICA is the first to bring it to market with finance. And we think that as iTunes did in the music market, we think this is going to change the whole of the insurance market and the export market, and we want to see exporters being able to take it up and develop their business. In terms of which countries can you deal with easily using URICA and Euler Hermes? Well, the countries here in blue are really simple. And Euler Hermes database covers about 40 million companies, so you should get a very, very fast answer. Of course, it's not totally global, and there are markets which either there are restrictions because of politics or because they're very, very difficult markets. And really that is where James is able to fill in and color in many of the gaps. So James, can I just pass back to you, and maybe you can make a comment about single invoice cover, how you think that works, and how you can dovetail with the URICA solution.
The UK Export Finance credit insurance offering is also a single invoice basis, or it can operate as a credit limit to cover a number of invoices. But the bottom line is it can cover an individual customer, and I think that's quite attractive to businesses that sometimes are reluctant to or don't feel the need to offer all of their customers to be covered in a traditional what is called a whole turnover policy. So yeah, I think it can complement URICA's offering in that respect by perhaps filling in some of the gaps. Also, the policy can have a bank noted on the policy as a lost payee or an assignee. So that can be a route to offering the bank security and therefore potentially a way to unlocking additional sources of finance. Yeah, UK Export Finance can cover many difficult markets. We can cover countries, have really covered in countries such as Burma, for example, recently, and in fact, sometimes the only challenge is not so much that we are unable to offer cover, but it's finding a way for the exporters to get paid through the banking system. For example, we can offer credit insurance in Iran, but then sometimes the challenge that is currently out there is for the sort of banking system to be able to get to a point where it's comfortable in sort of doing the same. So there really are only a few countries where we're not allowed to cover, and those countries are going to be the sort of countries where EU sanctions are in place. So you know, even there, that's you know, sometimes where we've had to take the lead from sort of other bodies. So. So yeah, that's pretty much the UK export insurance offering in a very concise summary.
Thanks, James. Now listen, we've got quite a few questions coming in, so I'd just like to come back on some of these. We've got somebody who's coming from the creative sector in Shoreditch, and they're looking at producing an advert for the Chinese market. They've talked to their bank, but the project is delivered in 3 stages. There's a pre-production stage, there's a filming stage, and there's a post-production stage. And the bank is saying, well, we're not able to do it until you filled all the stages. Does URICA fix that problem? The answer is yes. It's very simple. As long as your customer is able to say each stage is complete, yes, we can credit insure that, and yes, we can fund it, and yes, we can cover the forex exposure during that payment time. So that's the first question we've had. We've had another one in, and it's a company based in Germany. It's looking to export into the oil sector, I think in the Netherlands, and they've been asking, you know, how quickly can you cover this? What are the likely costs going to be? Holger, can you give us some insight into that, please?
Yes, of course. So that's very easy. It's very quick, and the company can use the URICA platform to register and to put on the invoice on the platform, and then it's in a third of a second he can see if he will finance this or not. So it's a very quick solution, and it's very easy and easy to understand.
Okay, so we've got another question here, and it's for James. With sanctions being removed from Iran, it doesn't seem that the financial institutions are keeping up. How can I get money out of Iran? That's a complicated one. Good luck with it, James.
Yeah, thanks, Ian. Yeah, the problem is that you know, UK Export Finance isn't in a position to tell or order the banks to accept payment. That's the challenge we have. Each of the banks will have their own policies. Anecdotally, I understand there are some European banks, some smaller European banks that will work, will accept payments from Iran. But I think whilst it is a kind of complicated situation with obviously the US taking a slightly different stance on it to the EU, and therefore some banks, you know, are going to be worried about, you know, falling foul of US regulations as well. So the short answer to the question is, I don't really, we get asked this a lot, but we can't, unfortunately, compel the banks to accept payments. So my role, our role really is just to try and be aware of what banks, what their situation, what their stance is in Iran, and try and be, you know, up to date, because it is a constantly shifting picture. Sometimes it's 2 steps forward, 1 step back. You know, like last year, in fact earlier this year, some of the main banks were beginning to accept payments, but it seems to become a little bit more difficult again. So it's just kind of keeping our ear to the ground, and hopefully the situation will improve. But as it stands, I don't believe any of the main UK banks are unfortunately accepting payments from Iran. Unfortunately.
Okay, thanks, James. We've just got another question in here, and they're talking about avalized bills of exchange. They've been looking to, it's a small company that started manufacturing a specialist resin, and they're trying to export it. It's a very niche product all over the world, and they've been talking to their bank for 3 months about avalized bills of exchange and covering the risks, and somehow it's not quite delivering. I would encourage you to give us a call. The markets that you're talking about, some of them are simple, some of them are not so simple, but I think we should be able to get you an answer very quickly. Using Eulerhermes database, we should be able to decide whether, one, it can be credit insured and underwritten, and if it can be financed. And again, that should take minutes, not months. So yeah, that's another question that we've had. Oh, somebody's just putting another one in. Join late. What's your criteria to fund business, James? So James, do you have an answer for that one, please?
Is the business exporting? Is there some UK content in the export contract? We have a 20% minimum UK content eligibility. It's rare, but you know, the export is not going to comprise at least 20% UK content.
Yeah, unfortunately, the question isn't that clear, but can you give us just a sort of basic, you know, these are the things we would normally look for?
In terms of the company profile, it can be any size of company. We're not looking for, you know, we haven't got any sort of set down criteria about how financially viable the company is. It needs to be sort of operating in the UK. We cover all legal sectors. There's not really too many barriers. I probably need to understand the question a little bit more if they have concerns that we might not be able to help to turn it around that way. But there's not really, you know, we're there to try and find a way to assist rather than not.
Okay. Now we were bound to get this question, but I'm going to direct it to Holger. Is the love affair over with the UK now we've voted for Brexit?
Yeah, okay. As a European, I regret that decision for Brexit, and I still can't believe it. But nevertheless, I don't expect that the trade between our countries will decrease. So we have a long relationship in business, and we have a lot experience with it. And you know, Switzerland is not in the USA, and we do trade with them, and we do a lot of trades with other countries. So I don't think that it has an effect of our business relationship. So it's we have a long tradition.
Thanks, Holger. It was the question that nobody wanted, and I think you're absolutely right. Whatever the politicians decide, I think businessmen will still do business, and what we need are the best financial solutions, the best insurance solutions, the best forex solutions, and the use of the best digital technology. And hopefully we've given people an insight to that today. Thank you for all attending. Please follow up with more questions. We'll get back to you. And yep, thanks very much.